Now we know what the accounting equation is, we need to look at what the balance sheet is. And first of all, we'll start with what's the purpose of it? Well, the balance sheet is set out like this. It's a big T. So we can see like a title up here and then a big T like this. And what we say is assets are going to go on this side. And we've got liabilities here and owner's equity here. Okay, and what we say is this side is called the asset side. So obviously it's the only heading there is assets, so that's called the asset side. This side also has a name and it's going to be important in some later videos. And what we're going to say is that this is the equity side, not the owner's equity side, but the equities, because equities kind of include liabilities as well. So it actually includes both of these. Okay, so let's look at a couple of other little details. This is how we set it out when we write the heading. We start with the name of the business, so Business X, so there we could put Facebook or Tesla or Kmart or whatever. We write the balance sheet, and as at, those words are important. We'll talk about that later. And then we say this date here. So this is when this balance sheet was prepared, the 31st of January 2025. We also look at it as a statement of financial position. You might see that term a lot, and a lot of businesses, when they make it, they actually don't even call it a balance sheet. They call it a statement of financial position. And what they basically mean is that that's because it shows the position of the business in terms of the three things that it has. It has assets, which are if we look at the definitions, the present economic resources or benefits controlled by the entity as a result of past events. And on the other side, we've got the liabilities, and the definition was present obligations to transfer an economic resource or benefit as a result of past events. And then this side here, this owner's equity, well, what we've got is, it's a very clunky definition, but it sort of makes a bit more sense now. It says it's the owner's residual interest in the assets of the entity after deducting all of its liabilities. It's all of these once you take out all of these. So it also is, what is really important is it actually just represents the accounting equation in a formal business report. That's all it ever does. And that's because we said on this side, the asset side, we've got assets. Well, the accounting equation starts with that. It says assets equals, well, what's on this side? We said liabilities plus owner's equity. So the balance sheet is just like a documentary proof that the accounting equation balances, except for it's set out as a formal report. All these numbers should equal all these numbers. So what else do we need to know? Well, let's just take an example. You looked at this one before, but you need $2,000 for a new iPhone, but you only have $500 in your bank account. To make up the difference, your parents give you $1,500 as a loan to buy the phone, and that's going to be repaid at a rate of $100 per month. It's not a gift, it's a liability and obligation. So we said when we looked at this, your asset is the iPhone, which in this case is $2,000, equals your liability, which is the $1,500 obligation or loan to your parents, plus your owner's equity in that phone is $500. $1,500 plus $500 equals $2,000. Well, we could set that out in a little balance sheet just for the iPhone. We could say on the asset side here, we've got an iPhone, it's worth $2,000. However, on the equity side here, we've got our liabilities, which is a loan from your parents of $1,500, plus your owner's equity, which is your capital of $500. And what we do at the balance sheet is at the bottom, we total it up to kind of prove that it does balance. And what we say is this side, the total assets are $2,000. And over here, we say this side, the total assets are $2,000. So it's obviously needs to be a little bit more complicated than that when we do a business. So it is going to be more complicated, but overall the principle is the same. This just will balance and it will match the accounting equation. So let's take a hairdressing salon owned by this lady here. The business has a property of $200,000, $40,000 of equipment, chairs and basins and so on, $10,000 of product and combs and stuff like that, $50,000 in the bank. However, it also has a $100,000 loan to the Bendigo Bank. So now we can look at this lady who's the owner. What's her ownership or representation or claim to the business? How much of the assets does she kind of have a residual interest in? Well, we've got our accounting equation for that. We add all these up, 200,000 plus 40 plus 10 plus 50, we've got 300,000 equals that debt to the Bendigo Bank of 100,000. So her owner's equity is 200,000. That's her residual interest in all of these assets. Well, what we'd actually do in reality is set that out as a balance sheet. So on the left-hand side, we'd have the assets. So we've got the premises, we've got the furniture and fittings, we've got the salon equipment, and the cash. On this side, we've got the liabilities. We've got a $100,000 loan to Bendigo Bank. And in the owner's equity section, what we do is we don't write like the number here. We say under owner's equity, the owner's capital, which is this number here, is 200,000. Total that up, we added these numbers up, we get total assets of 300. Then we open this side, we've got 100 plus 200, we've got total equities of 300,000. The balance sheet balances. And all it's doing is representing the accounting equation there. So if we had to summarize what we've just learned, we'd say the purpose of producing a balance sheet is we want to detail our assets, liabilities, and owner's equity at a particular point in time. And that's what we say is as at. So in this case, as at that point in time, which is the 31st of January 2025. And its purpose is to allow the owner and other users to assess the firm's current financial position. People can now look at this balance sheet and make decisions about this business. And I guess the other purpose of it is it represents the accounting equation as a formal business report.